Hello, good day. My name is Hussein and I'm Forex Optimum Broker Financial Analyst. I'm here to bring you all to give you this weekly review what's happening in the financial markets and what are the new updates that have actually taken place. Having a look on US Sino tensions are in focus as well as coronavirus spread across the globe and second virus relief package debated in the US Senate. Visas for more than 1,000 Chinese students and researchers were revoked by the United States administration yesterday, who are deemed to be a security risk for the United States. That move was claimed by China as racial discrimination and would certainly provide another spin to already deteriorated relations of the two largest economies. A record of newly infected cases was reported from India, which were more than 95,700 new cases infection were detected in a single day. Other ASEAN nation also reported coronavirus situation is gradually improving, while in Europe the numbers of infections continue to rise. With the US new infection numbers are declining. At the same time, they may prompt some optimism and a fuel for another possibly rally in risky assets including IT sector. The most anticipated macroeconomic data this week is the US inflation that is expected to be published this Friday. And there are reasons to believe that data would be better than expected as unemployment is declining and average hourly earnings is picking up. The S&P 500 broad market index is following a slow recovery path. Some attempts to break through 3400 level were performed in the recent days. So the situation has not changed globally and we believe the nearest target of 3588 points is still intact. The demand for safe haven assets, including US treasuries, persists as we saw yields are coming down a little to 0.668% on the 10 years benchmark bonds. Gold prices, on the other hand, are squeezed in a tight range of anything between $1,863 to $2,015 per troy ounce, but are beginning to gravitate to the upper margin of this range. This could be explained by weakening greenback after the US dollar index broke down the 9,300 points level. All fundamentals behind a weak dollar are still in action. The monetary policy of the Federal Reserve is considered more dovish after the monetary regulator removed the inflation target of 2% as a solid cornerstone. So market participants agreed that the Fed will no longer take close attention to the inflation as more monetary stimulus measures may be introduced. The weakening greenback is considered to be a part of new Fed's policy. We may expect the money printed from the Fed could increase its spin to inflate a stock market bubble even more. And that's what we will be having a look on that. On the other hand, Brent crude prices returned above the $40 per barrel level. However, traders believe the upside swing of crude prices is temporary and a downhill run in prices may be resumed. The end of driving season in the United States provides another reason for this slide, and the bearish sentiment in the crude market got more strength on the other hand, which is why the greenback pressured crude prices denominated of the US dollar that we saw after rising in the greenback. A decline in crude import by China also nudged oil prices to slide down. So these factors are not in favor of crude prices and could pressure them further down. Technical picture suggests that Brent crude benchmark could plunge to $37 per barrel level. Thank you very much, and that's all for the day.